right, let's get it. Thank you, thank you, thank you. Happy Thursday, everybody. Welcome. Today is April 7th, live, another Harmonic Pattern podcast. Today we've got Mitch Ray in the house. We're going to bring him in a couple minutes. Everybody else in the chat, quick shout out. Welcome. Happy Thursday. Maybe not what you wanted. Doesn't feel as great as Tuesday, but this is what we were really pegging for. Now, what are we going to do? Really easy to jump back and just kind of go to, kind of a crazy state of mind and just expect the worst. But we've been thinking about this pullback and wanting to get a pattern on the pullback. So we got it. 4-hour. Beautiful Gartley just completed. Welcome, everybody. Got a bunch of people jumping in still. What's going on, Marco? Snipes, Crypto Cartel, Bull Script. Thank you for all your posts. Appreciate it. JR. Miss Stephanie, we will connect today. You know how it goes. I'm sorry. It's just been, I got to connect with you. But everybody else, great to have you. Again, we're here Monday, Tuesday, and Thursday, Harmonic Pattern Podcast. And we're working with the Harmonic Pattern Collection. What I want to get into briefly, and then we're going to get Mitch in here. Mitch Ray TA. Most of you guys know Mitch. Does the best TA show on the web 7 days a week practically. Yeah, I don't think you guys missed a day this year. So we'll get into the crypto. We'll talk the other markets. Probably a few things that we need to address. We probably need to take a hard look at the rate, the charts on the rates. So we'll get Mitch in, get his more than 2 cents, like his $2 million opinion here, and see what we have to say. Everyone else, yeah, appreciate it. Everyone's jumping in. Kevin, Claire, Arun, great to see everybody. Um, I just want to talk quickly again about big developments with Bitcoin. Shout out to anybody that's in town or the Bitcoin conference in Miami. I think Mitch and I pretty much really cleaned it up enough last year that we could take a year off, but maybe next year. I don't know. Just too much stuff going on at the moment, folks. But Bitcoin is back and done the pullback. That 44,000 was the general area. And think of it again as the stair-stepping approach where markets never go straight up. Then look at our retracement numbers here. At least we have a nice ABCD Gartley configuration. 618 at the B point, 786, and an ABCD off the top, your A to B leg at the 618. That was from 48,000 down to 44 and change. Same equivalent distance. ABCD pattern, folks, is usually the minimum requirement for practically every MW formation. I've been thinking I'm going to do a course in May that will get into super details. I had to put it off, just time-wise, but I do think May we're going to do that course where we get into the super details, spend a Saturday, do it, intensive, so that the reference material is there, because these measurements matter. The one other chart before I bring Mitch in that I wanted to highlight, because it relates to everything. Total crypto market cap, folks. And we talked about this crab pattern on the 4-hour. Perfect, beautiful. How this was set up where, look how many days we go sideways on the 4-hour. It's a type 1 reaction. That's it, and that's okay. Not only is it okay, but we're hitting that level, which is $1.942 trillion with a bullish HSI signal. Perfect reaction material. Absolutely the ideal pullback where you come down to your target level and then you trigger HSI. So for total crypto market cap, I'm still fine. And do recall, has everything to do with this larger crab pattern where, it's a deep crab. We're essentially looking at the 1.6 area as significant support, where we're then, we said that 2.1 trillion was the target one limit. Hold on one second. I've got to highlight the levels so that we can see it on the chart. I don't know why it's not selected by default, but let's just bring that back up. There you go. So 2.09 was there. Technically, yeah, we can say that's just a reaction, type 1 reaction. And the thing to watch, again, harmonic strength index is already oversold. So on this pullback, we let out a lot of air out of the tires. And now let's see what it's going to do. Can we pivot out? Because this was the thought, again, it still is, from pure harmonic pattern perspective, that this 1618 is just a breather, and we come back for target 1 to set up to go for the retest. That's why going into tomorrow, so pivotal. Let's see what happens here. Let me bring in Mitch, see what he thinks, and do that. Okay. Mitch, Are you there? Let me bring your mic in.
Hey,
Everybody, Mitch Ray TA, the one, the only.
hello.
Let's give a shout out,
Uh,
please, everybody. Mitch Ray, how are his levels?
yeah, we good?
Are we good on the levels? We good on the modulation, Kenneth? What is the frequency, Kenneth?
The modulation, oscillation, all the things. Am I okay?
Consolidation.
Yeah,
Let's go.
which which waiting on some of that from I guess Bitcoin, at least on less significant time scales.
Excellent.
Where yeah, well, I mean, yeah, you were just talking about total sum that is so similar to Ethereum, where it was that same massive crab pattern that had the type 2 return with the bearish divergence. And I don't know. I think I had messaged you like at around 34:20, and we are just seeing what we were doing this week. We were streaming together, and my God, that was respected really well. Where it dropped another 8% before rallying, and now it's almost we got 10 minutes till a fresh 4 hour bearish engulfing candle on Bitcoin and Ethereum.
Yeah, let's. This has actually been a fortuitous time to be talking these markets. It seems like this 12 noon is a pivotal candle in more than one instance, and that we've forget where we were before, but we had something maybe breaking out, and now, okay, where are we? Where are we on this whole scale of since the March lows? Talking 6 weeks of action from basically 2400 seems to be the floor up to this 34 area. Um, I I think what you were talking about, Mitch, was this kind of internal crab.
Yeah, X being March 1st high, the
Mm-hmm.
peak, March 1st, 2nd, whatever.
Yeah, 1618's at roughly 3400, and this is
Yep.
a. Did it get to the 1902? It didn't. Almost. The 1902 is a secondary number I used to overlay with that, where basically we know 1618 can get exceeded, but that's kind of the thing. I've been thinking this is a pause. I think this is looking for a pullback. I should bring up the Twitter chart. We had a alternate bat pattern on Tuesday when we were here, and a lot of things were popping. Yeah, I'm going to show it. This was it, where a similar situation, clear type 1 reaction now coming back, and I had basically laid out an arrow that said come back, retest that bat pattern, and that XA level was at 44 100 with the hop level around 42. It's at 926, it looks like. um, so on Bitcoin and Ethereum, with a lot of these other patterns, they still at least are in a type 1 reaction where against that 1618. But beyond that, you're almost oversold on a few different measures.
Oh yeah, I mean no doubt that I mean you just Ethereum, Bitcoin, on defaults had all hit their lowest level of RSI in a long time. I would say a long time since the nadir of the year low, which was like January 24th, 22nd. And what the heck? Did an alert just go off? Oh God, the Nasdaq composite just got a beep. What does that mean? Um,
Let's see.
oh, not good, dude. Rolling over bad right now. It's already down 1% and falling at session lows. And that's you
Pull that
cannot
up.
be surprised. Yeah, you cannot be surprised about the Nasdaq rolling over here when we knew if you fell below 14,171, there was nothing. There's no support till 13K. I mean, it's straight up, straight down every single time, except like once, March 3rd. That's it. So yeah, I mean, are we I mean, we're downtrending still. We have ourselves a midterm downtrend on the index funds. And sorry, I didn't mean to like derail anything. It's just the alert went off, and I've been monitoring the Nasdaq because it's just. Oh, you want to hear a crazy stat? Since February 24th, there is a 90% correlation in price action from the Nasdaq or the Qs rather, the Nasdaq 100 Tech and Bitcoin. 90% correlation. So it's like pretty much that joke we make about Bitcoin being just a scrub tech stock sometimes. Well, lately that's kind of been the case. So,
Yeah, you had a nice reactive move on Bitcoin that was just in terms of it surging coming off the low. Absolutely had reaction, but cleared out, at least got off the bottom and cleared out some uh, critical short-term structural things on the daily. And we did hit some, short-term oversold metrics, but I think we're letting out a lot of air of that, the move from basically end of March into the end of the quarter, and you're pretty close to letting, I think this final kind of thrust down. I do, of course, it's going to be correlated with the markets. If the Nasdaq's still going to get hit, it's probably more about interest rates, and you got the 10-year continuing to move.
yeah, just hours ago, multi-year highs, highest level since like 2019. Again, every day it's new multi-year highs, right? So,
And that's the
yeah.
fear. It's something that was never there, of the past decade. A
Hmm.
real threat to do a spike on the 10-year yield and then get this out of control where, forget one, two, three. Let's talk six. Let's get up there to six, and let me bring
Yeah,
up
it's
that.
breaching a resistance from December 2016, and there's really not much of any price action above you till 3%.
Doesn't
I
help
mean,
that
that's
it inverted either.
yeah.
So gives a good reason for people to just point the finger even more so.
Well, right, it's like all the I mean, it's got all the makings of a recession where you've got all the yields spiking, all the 10-year yields or whatever, and then you've got yield curve inversions, multiple ones, and then you have really crazy commodity spikes like we saw in 2008. But now we have like this mixed flavor of inflation and then supply chain issues and energy shortages. So it's like it's not just like one thing happening. It's not just the real estate market. It's a bunch of other things. It's a bunch of everything. It's just would you consider this a unique situation from other historical tumultuous times, or is it not really a big deal?
This is a lot of the 2008 thing, the whole CDO crisis. You had a few things behind it. You had a real big driver of easy money that preceded that
Hmm.
2008 collapse. You had super just over a flooding environment of bad debt. That it was a tsunami of bad debt that was just accumulating until it really hit the market. The other thing was you still had Iraq going on, so you had that war element
Hmm.
of, okay, with that whole geopolitical headline risk all the time. And but this is a magnitude. This is I think it's of a bigger magnitude. Of course, there's a exponentially more money involved. Um,
Yeah,
you've
more
Fed.
leverage probably, right?
Oh yeah, I mean, like a 10 times probably the numbers you're talking about
Mhm.
from that financial crisis. Where, think about it, the Fed's balance sheet back then was maybe a trillion, maybe a trillion and a half. I'll have to bring up the
Yeah,
chart, but
it's gone insane.
so they're nine, or they're nine and a half, saying they want to get it under nine. I think that's a lie. They can't do that without crashing the system that they've created,
Hmm.
which is, pretty. pretty common for these type of manufactured cycles that are direct consequence of easy money. And I think the thing that is different than all other times is you're at such a low rate of interest where coming off these lows to make the adjustment is you don't have any room to deal with the situation like you did back in 2008 or the many times Greenspan who was able to cut rates from 8%, 9% down to 6 and they said he was going crazy when he got under 6. Um, it's those dynamics. No one knows what the true consequence will be. It's been a long-term halcyon style move of easy money, crazy valuations. There are, that would be probably the two charts to pull up would be long-term valuation chart, long-term PE chart for S&P, um, and then look at the Fed's balance sheet because those two things are absolutely within a historical reference. You have to understand where you are in all of that. Let's see. Let's try to find something that's somewhat recent, like a 10
Yeah,
year.
do you have like a valuations chart, like a ticker?
Yeah, I mean, here's a valuation chart forward PE on the S&P going back 10 years. And again, that's not up to date in terms of relative. Um, Let me see something, trying to get something recent. Yeah, that might be a good place to go, investing.com. But you can do the research that we're on or at historical ranges or maximums and on both sides. So this is forward. Oh, this is the amount of earnings. Yeah, I should find some good charts and there's forward PE. Plus 22 at the low of the 11 back in 2011, right after the real low 2010. You're down 10, 12. That's the recent modern historic PE norm. And now you're 20 something on the S&P. That's high. And I know the Nasdaq was 35, 36. But again, those numbers only drive the bigger numbers of interest rates. Like if they're really going to matter now and you're in a unique time for this movement on rates, well, let's throw some patterns on it. Let's connect some dots. And just looking at the
Yeah.
10-year yield, I've brought this up before. It's been a while, but I think about a month ago we went through rates when they were really breaking out.
Yeah, that symmetrical triangle is beautiful.
Yeah, and that's a static, I think, TA pattern that everyone's looking at. But we have a clear bat structure with your B point that is at 47, 48. Let's call it a
Oh man, so much
50%.
more to run.
BC's at a 2618. I mean, these are ideal numbers. And then your target 886 for the rate alone puts you up there at minimum 3%, folks. And
hmm
we're in the BAM acceleration. We've been in that BAM acceleration. It's amazing, but it's really only been since January that this structural breakout, harmonic breakout, has been triggered, moving just an incredible amount. You probably do almost 100%, an 80% move in yield from that breakout point by the time you get up to 3%, and then you'll go from there.
Yeah, when this keeps going up, I mean like this is affecting mortgage rates, right?
Mortgage rates, I know that has probably spiked even more so.
Yeah,
Let's see if
like
it's
5% right now. People are talking about, anyone getting a loan or something right now, or like a mortgage, 30-year fixed, it's like 5% now.
yeah. Where is that? Oh, that's probably under economy. TradingView's got a lot of great charts, incredible data on all kinds of things. Actually, why am I looking at? I should look at TradingView. They've got it all, money supply and everything. But let's look at those mortgage rates first. And we can do the same thing, apply the same uh, harmonic pattern principles to these movements. Let's say mortgage, United States mortgage rate. Let's see what that is. Whoa, beautiful. So on TradingView, they have, if you look up under their data section, they have this economy tab where that has all kinds of economic statistics. The really cool thing that you can do is apply technical analysis, harmonic patterns to be able to gauge how far this stuff could go. What are the
Yep,
possibilities?
there it is. USMR 4.9%, right in line. Yep.
And we have a pattern, okay, a long term weekly pattern. What's daily look like? Same
Oh
deal.
man.
And all of that's pointing on this move, go back clearly above 5, as maybe as high as 557 with this hop level. Minimum retest level would be 515. You're only 490 at the minutes at the moment, which says, okay, pretty likely that you get US rates to go, mortgage rates to go above 5 or well above 5
That's
on
crazy.
on this move.
I mean, like, how long? I mean, has it been? I know we went up in rates like a few percent or whatever with Yellen in the mid teens, right? Or like, 2000 teens. But I mean, beyond that, we started lowering them again right after 2018, the volatility crush or whatever. I mean, like, market participants who are like my age, we have not lived in an environment where we're over 0% for long at all. Like the majority of my life as an adult, interest rates have been zero. Think about how crazy that is. And I'm like 34.
Yeah, and you know what? And access to capital has only become more difficult for your generation. Not it's not easier. It's all of this stuff, all of these interest rates, all of this stuff has only benefited the corporations of the world, the people like BlackRock. Okay, these moving rates aren't going to affect guys like them. I mean, BlackRock is buying up neighborhoods and then flipping
Yeah,
them
they're
to
the reason why. I mean, in
yeah.
a way, they're kind of causation, like why everything's so screwed up now. They took pure advantage, in a free market situation, kind of exploited it in ways.
Absolutely. They definitely, let's say, tilt their hand in the direction of, hey, we can do this on size, whereas millennial generation has a extremely difficult time getting getting approved for a mortgage, first time buyer. And a lot of those requirements were a result of the '08 crisis, where then they came in and they basically raised all the standards. It kind of reminds me of what they did, what I went through with my registered investment advisor experience of spending a couple of years doing that, getting all the regulations, only to find out that in the Dodd-Frank regulation after this crisis, they basically said, no, you can't do anything. If you're going to be an advisor, you can't do anything. And so if you were a small-time guy like me trying to start out, you didn't have a chance. I mean, you need like 20, 50 million to really have a go of it. And mortgage rates and mortgages now, as people get forced to rent, most people are forced to rent because they don't have the opportunity to get the financing they need to get into their first home, no matter what it is. Um, so you're seeing that, and you're seeing actually individuals get squeezed against the corporations. Now you've got a spike in rates. That's going to cap the market, but how high? And I think you go to nice round numbers of 5.5% is not a bad place to be thinking about uh, where this on this run where we could go. And if it spikes above that, then we have a problem, a bigger problem.
Yeah, you're saying 6.5 is the next big number after 5.
No, I'm if I'm going to break this down and just look at what's, as I say, connect the dot, kind of a thought process of where this could go. The immediate, both the weekly, the daily have these, some real nice small patterns, but this one weekly pattern that goes back to 2014 certainly gives me some levels to consider. Um, Even if we were just looking at from the 2020 peak, we do have a really nice W formation. It's an X, A, B, C level. B point is less than a 33%, so not really nice of what we want to see, but it sets up kind of an alternate formation. The minimum 886,
We're
of
almost there, right?
yeah, we're right about there at 4.94, 4.95. These alternates like to run, try to retest the X point. Again, I think somewhere between 4.9 and 5 is a good target. Literally now, not going to stop until we can get this to retest that. Not only the static peak, but the fact, hey, there's a pattern there. This weekly pattern going back, it's a deep crab, sets you up where we know it's in a type 2 return from the language that we use from harmonic pattern framework. It was a phenomenal reaction. I mean, a huge monster dump off that 515 level. And you know what? I'm not very good. You're a lot better at me, Mitch, at working these charts and overlaying markets. But I bet you the this chart's probably inverse to what the S&P or Nasdaq looks like if you were to overlay these two. Um, but even on the daily, I think again it's no matter what you're in that thrust phase, breakout phase
Hmm.
where if the rates are going to keep pressuring the market, which they are, we'll look for that full retest at five something, five and change. And if it gets crazy, this is the thing where there'll be plenty of time. If there's going to be some kind of crisis that comes from the rate scenario, I'm not there yet because I do think you're going to pause at a minimum as we typically do when we hit big numbers. But the a super large candle or something unusual, obviously unusual, happening in the next 30, 60 days would would negate that, where it just pops and goes straight to like above 6 or 7 because
Yeah, did you see the chart I posted in our PM on Discord? Like to show the levels and stuff, and to show that demand, that supply line that was breached
let
for the
me
first time, kind of like literally ever.
let me go back to where you are on Discord. Open that window. Okay,
It's
cool.
just simple chart, yeah.
Oh, there you go.
I mean, breaking the anchoring from 1990 and 2000 and
Oh, that's
2018.
there's a great chart. Nice.
It just seems like if you were to break five, and you'd be violating, obviously violating the pattern, which can happen, it may not, but if it did break five, it seems most likely 6.5%, like you just said, would maybe be where it blasts off to. And that historically, that's exactly what it does if it breaks 5%, just based on the chart.
You have the two lows that bottomed out down there at 3. Clearly, a breakout above this
Yep.
5 triggers a whole bunch of other things. I mean, where's the? Let me bring this back up. The big possibility for this, if you do something crazy above 550, would be a big 1618 impulse. That's about the only thing you would see, and it sets up pretty nicely if you go off of like,
Wow, it's so confluent. It's beautiful. The 1618 and 6.5%.
yeah, like this.
Literally perfect.
Yeah, 6.9 or so. Um, that we'd have to get crazy off of there, but that gives you some short-term areas to be looking at in case this does, something happens. If something does develop that puts a severe pressure on rates and we see something in terms of the markets um, get super ugly. Let's go take a quick look
Well,
on.
aren't there, isn't it projected there are going to be more basis point raises this year, like multiple ones?
Yeah, I mean, look, the target rate I think is to get to 3.5 or something,
Dang.
but the market's going to dictate where this will go. If the rate scenario is out of control now, which they fear, and let's say inflation comes in, starts printing double digit inflation, doesn't matter what, 10, 14%, doesn't matter what it is.
It already is there. Yeah.
Well, I mean, it's there, but what they will admit
Oh yeah, sure.
then is okay, situation's out of control. We can't lie about it anymore. We can't kick the can down the road anymore. We have to deal with this.
But that would translate into certain recession, right?
Yeah, I mean they would have to tank this market um because they do have a couple of real dilemmas with higher rates in terms of even budgetary concerns where interest rates back up. Right now the interest rates on the budget's like 15, 17%. Again, I'm getting into a whole bunch of statistics. I should research exactly, but um, certainly the backdrop for where we are to get a lot worse is obvious, and it's been obvious for a while. Now we're going back to hit some historical highs. And 2019, the raise in rates, that was like a kind of a real quiet, uneventful rise. I mean, that kind of surprised people by the time that got up to 515, and then they realized, wait a minute, the Fed was talking about raising rates at that point. The market pushed them up. Now it's more like Fed's behind the curve. They need to play catch up where 2 years ago they seemed to be ahead of the ball. Maybe they should have started 2 years ago, but then COVID hit.
Yeah, but also I don't know. I think we had like I don't know. I think when you add to the money supply like $1 trillion, that's gonna affect inflation and stuff and liquidity in the market to drive asset prices higher. And I think we had I mean, like I think okay, President Obama had to do it. Oh wait, had to. Trump had to do it. President Trump had to do it. Like COVID, there were crises, right? And then you have Biden, where he also printed insane amounts of money, and there was no reason to do it. Like none. It was like one, two, you went too far, printing more money for that third time, you know? Uh, so that to me, I think really exacerbated things.
And
I mean,
you
clearly.
still have, I agree with that, and you still have this overhang of government spending and government spending. Again, here I go throwing out random statistics. I'm welcome for anybody to correct me properly, but mandated government spending is comprises, I think, I don't want to say 40% of the total economy, but it's up there. It's like a 30 something, almost 40% number where the mandated government activity by law that they have to spend this money is a big part of the economic activity. Any economics majors, past or present, who want to be able to throw out some links, please do so. But again, there is still this whole mandated spending to come, where the government's going to just kind of keep throwing paper, so to speak, on the fire. That even if they raise rates, you still have the demand coming from the government. It's, in a way, kind of pushes out the little guy. Government's in there driving up the prices, and then the corporations are driving out the individuals, especially with this unique home situation where they don't really care. Like, government can handle the inflation. Why? We'll just print more money. The
Hmm.
corporations can
Which is a direct causation of more inflation.
people get squeezed. So
Yeah, it's bad. And but then, like, these all these companies are reporting record profits, not talking about revenue, because that's, everyone understand revenue and inflationary environment, duh. But dude, if you're talking about record profits for all these companies, I mean, clearly they've taken advantage of this super inflation going on right now. So yeah, I don't know, man. It's
we are in a spot. Listen, I wanted to bring this weekly chart up. It's an interesting. We have a Gartley on the 30 year. It's a type 2. It's actually a perfect type 2
hmm
at 276. So, I mean, there are nice patterns where it definitely adds to the situation that I want to watch going into the next week, 2 weeks, certainly by the end of the month. Um, we have some real severe bullish action happening on a secondary retest where it should be starting to reverse. And that's what I'll watch here, because if this is going to fail the pattern, then you should see some kind of explosion this week. We're up pretty strong. Let's talk to me in about another week or two. Where are we on the 30 year? Where are we on the 10 year?
30 year though. I mean, I see. I think like, wouldn't you agree that harmonics are always strongest when their pattern completion zone has good context based on historical supports and resistances, right?
I, I
And
I agree with that. I'm just saying, tell me what happens. I'm looking at 276 specifically, knowing
two, 7, 6.
we have this retest. Um, I'm just saying, tell me what's going on in this general area. If you see a big surge, a big move, I
And I'm thinking 3.24, right? I mean, that's historically what the US 30 year, like it goes straight down, straight up every time between 2.453 and 3.24. This ever since like 2009, 2008. I mean, like, right? I mean, you went down in 2012 and you went straight up to 3.24. And then, you fell below it 2014. You went down to 2015 to 2.45. And then you rallied straight back up to 3.24. And then back and forth. It just many times. So if history repeats itself like it does so many times, I mean, you would think that we would see 3.24 again. Now, again, like, maybe history doesn't repeat itself this time, but between these two levels, yeah, I mean, it seems like we're going higher. I would think. Maybe.
yeah, against the historical highs, you would think you've got more than enough kind of sentiment, and you do have, I'm just talking from the pattern perspective, the way that we would look
hmm
at that, where yeah, you're at 276 here, and it's 27, where this is where we want to look to see if this thing, it's either going to stall out, or if you see a surge that will lead the breakout and the continuation higher, like you're seeing in mortgage rates, like you're seeing in the 10 year. You do have a little pattern that gave you a perfect reaction. It was a
hmm
Gartley right off the bottom. But this is again where you're coming back for the retest and you're super strong. And you blow through it. It's not going to take much, is what I'm saying. Above 276, that pattern does fail. Then you kick to the higher time frames, or I'm sure you've seen this as well, where if you're just connecting dots, draw some kind of W formation here. You you get kind of Gartley, almost not a great one, but you do
You get
get.
a pretty real Gartley if you anchor X from October 2018. It's like kind of a 618 on B and a higher low on C. And you're, 2.88 is the 786 there.
Yeah, yeah, and
But I mean, how many times do we see a Gartley go to an 886, And the 886 is confluent almost pretty much with that 3.24%.
that's more what I agree with too. It just is the 886 and the static, all that static resistance there, three and change. Still, again, you've got minimums here that point you higher until
hmm
you hit it, and you're halfway, you're 2/3 of the way there.
Yeah.
So you're 270. chances of hitting 3 on the 30 year and above 5 on your mortgage, definitely. But this is the bigger thing. Again, this is the crazy. Let me see if I can get the monthly. So here's the monthly. This is the thing that this one only goes back to 88, but just take a look. You know, if you want to know why the stock market's just gone up and we're in a perma bull trend, it's this. It's been, and that was the peak. No, that wasn't even the peak. That was 88. The peak of that chart should be about 18% on the 30 year. That's where it was in 82. But
God.
you're just in this long-term downtrend of rates. Where are you breaking out for the first time? Is this something that leading to a much bigger continuation? Me
Yeah, man. It's like one of the first higher lows you've ever seen on this chart. Well, at least on the daily. Maybe it gives you more data on,
that
that higher low, December.
and that's on the monthly. I mean this monthly chart. I again static, a lot of static resistance where it easily goes back to 3. What happens when you get up there? Probably best to draw it like this. Is the real point of concern where I'm not. Um, I think you can book it and say, no problem for this thing to do some kind of W formation. It's not a
Oh,
real
wow.
clean Gartley, but if you go to, an 886 to retest that, again, that's 315. It just, when we're connecting dots here, easily these targets are as minimums,
Hmm.
still higher. Throw that on to current situation with the market, putting pressure on the market, continued pressure. Let's really quick. I want to bring up Nasdaq.
Wow, very interesting. So just real quick, and we'll move to the Nasdaq. On the US 30 year, I went in log scale and plotted a supply line. And the supply line, I know it's all gets a little weird on the Gartley there, but like I just screenshotted it. The supply line in log scale is pretty much that 886 and is pretty much that 3.24%. I mean, that's crazy confluence right there, right? You see what that supply line?
Yeah, this
Crazy.
nice.
Yeah, so X marks the spot, maybe. I don't know. I mean, at least, 2.88 or whatever, but maybe 3.24.
I think when you, yeah, I agree with that. I think when you can trace out this kind of stuff, even with that one, you go log, you could probably even use your draw out a W with using the that first midpoint, that first B point from, I guess it was 2020. But it's all lining up for a 6-1, excuse me, an 886 retest. Again, back above 3. You've got it there around 324. So you use that in your argument to say, all right, that trend is continuing, accelerating. Um, Employ the BAM principle, bat action magnet move of getting above your B point. That triggers you to the D point completion. That's how we treat it, look at it. And yeah, all of that still points higher. So this is just a classic area, though, where we can expect acceleration of rates, which is could be real tough. I mean, this kind of acceleration could have a negative impact on markets. Uh, let me
For
let
sure.
let's do the Nasdaq most of all because
Hmm.
that needs easy money to breathe, live. Uh,
Yep, and it's only retraced minimally from its COVID crash low. I don't know. It made a 382, 38% retrace, but if that's what happens, right? I mean, you hit the golden zone finally, that 382. You have a reflexive rally. The reflexive rally on the 3 day just turns into hidden bearish divergence. Wow, I'm looking at the 3 day right now on the Nasdaq, and there is hidden bearish divergence developing. I mean, so that's what you do at fib nodes. You react, but it doesn't mean major reversal is going to happen just because you hit the golden zone. And pretty much the TO was respected in that right. So it could roll over again and go test that 382. But if it's, not going to hold. That's like 12.6. I mean, 12K. If you ever break 12K, you go to 10.8 and then 9,800 after that. Jeez.
Yeah, I'm just wanting to look at the immediate last week. Uh, Surprisingly, we had accomplished a 50% recovery rally
Mm-hmm. What do we
of
call those sometimes? Dead cat bounces, maybe?
that's I think that's more 382 land, but you didn't take out the 618 level, and I think that kind of phenomenon. Um, there's really two things going on. One, something that we've talked about, you and I talked about it last month, actually was this massive crab pattern that fell about 40, 50 points shy of completion. That big 1618 from October. That is, I think that's still a valid support level. And then what you have off of this most recent low actually got to 58% or so. But the 5618 level, if you're going to just trace it out, you would say, all right, well, maybe some kind of W formation at a minimum. I'm going to be conservative here. If we're going to get some kind of eventual back to back pattern, you're still in the midst of having the move from just the past, from March being a reaction. That is a reaction. Um, Not able to get up that 61850 level. I'm thinking you continue to drop and do a day over day fall down. We could be in the start of like a 7 day thing, a 7 day drop down. I fear just based on the way this last 5 6 days have gone. Yeah, you target you're 14.3 now, 14.4. I'm still looking for that 12.8 level to get hit. Let me see where we are. Uh,
Yeah, I mean, that would be legendary because that would be inverse head and shoulders. Wow, be like crazy symmetrical, like perfect.
yeah, I think it's. I had mentioned last week we got overbought on a couple on RSI, and this is our amplified RSI as well. Um, that was that matched up with that 5618 zone. I would just you know venture to say that what the market's doing, a lot of zigzagging, a lot of stair stepping, if you will, but seemed to be going just from one oversold to overbought to oversold. So
Hmm.
let's ride this back down to an oversold level. Um, this is a pause, if you will. Come back down. Do we get a full retest? Retest the 1618 off the October low? Because that is, I think if anybody wants to know if there's going to be some kind of bear market catastrophe, you're going to violate, and in a nasty way, you're going to take out this 1618 at 12,884. And if you go underneath that and you violate that, yeah, the whole thing's at stake because, and I'm not saying this is going to happen. I just throwing out a big possibility here of what to be looking for, where essentially that big corrective move was almost a perfect 1618 corrective thrust down. It wasn't hit. That's the thing that bothers me. It was not hit. And my experience when these big numbers fall just shy,
Hmm.
they eventually get hit. So
Hmm.
I will I will look for this over the next, I don't know, again 2 weeks I think is
Hmm.
pretty clear. But if you get you can see it in the weekly candles. Um, this reversal, I think anything under 14.2, and really anywhere much further than we are now, you're going to break this down and you'll go back retest. I mean, it won't even be about 14,000. It'll be about go back retest 13,000. 12,880 is the big
Hmm.
number. Um, and then if we're going to have real problems, it's under 12,8. It is. I don't. And again, I think it's if you're thinking massive bear market, uh, like 2008, which was pretty nasty. Under the current levels, under 12.8 is the only number you need to consider because in my book, the way that I would line up the harmonic levels and look at this really since the COVID crash is do the spread, understand that the all not the all time but the COVID, call it, from the COVID low here to there is your 382.
Mhm.
Um, and if usually what we see at that 382 line are big continuations, that if the COVID rally is going to have another leg, well, come down to the 382. Hit the 382 at 12.8 and then go.
For a second time, yeah, to confirm it as a bottom.
Yeah, we still haven't hit it. It was
No,
no, it was a
real
lot.
close, right?
Yeah, I mean, you had the 1618 at 889. You have this 382 that's at 884, and then it got really close. It's again, if the market was going to really be bad, I think we'd be lower already, and that's why I'm not too concerned yet. I wouldn't be surprised it would come down and retest this support. But if that fails, under 12.8, that's where your again acceleration comes in. Your let me do this.
That's where the weekly you can discern a lower low, right? Like we know, yeah, midterm downtrend, we can discern lower lows on the daily, the 4 hour, 12 hour, all that, but like we can't really discern. We on the weekly, all that is discernible is the highest high of all time from November 22nd, and then I think we pivoted around that 382 in early March at 12.5 or whatever. That's a discernible low. You've rallied, and if you take out the lows now, you have a discernible lower low on the weekly. That can't be good, you know?
I agree. It can look. It could take a lot of time to before it's really obvious. There are similarities here on the Nasdaq back at 2000. I will say that the 2000 peak 20 years ago had a pretty crazy parabolic run to the top. The thing that we got though
Mhm.
was a pretty clear daily pattern on Nasdaq where we had Gartley-ish, some really. I'll go back there in a second, but we had some real clear bearish patterns um, after the top formed. So it will take time. If there's going to be real devastation, again, of going into a bear market because interest rates spike, which is what everyone's considering at the moment. I think that's going to give you plenty of time to take advantage of it. I wouldn't be surprised again to come back and retest lows of the year.
Doesn't
Bef-
it seem possible? Like, oh, sorry, go on. My bad. I didn't mean to
no,
interrupt.
no, no. I just think I like to take it in chunks, stay conservative, go with the clear, first measured target or two, knowing just like this retest on interest rates, that if it explodes through that, well, it's going to go. It will keep running within, how we look at the framework. What were you going to say?
Hmm. I was just saying, like, if we look back to the Nasdaq on the weekly back in 2000, where it seems like if we were comparing them, which whatever, it may not even be close in the end. But I'm just saying, like, if we were compared it, we've had the impulse down. And May of 2000 was like March of this year, early March of this year when we bought them. And then we rallied, and you saw that dead cat bounce where it rallied between a 50% and 618. I mean, it was pretty much like a 58% retrace, and it double topped on the weekly, and it was discernible. August 2000 before rolling over. I mean, it's almost similar to say that the Nasdaq has completing its first peak right there after the first dump and the discernible highest high ever, then the discernible valley created, and now we've run up, um, and now it was similar. I mean, it was like identical almost. It was identical in its actual rally from the high of 2000 to the low. When you go from the high of November to the February March low, it was like a 50. 6% retrace, and now you're starting to bearishly engulf back below critical 14,171. Um, I'm not saying like, hey, we're going through a tech bubble pop, but I'm just saying there's similarities on the weekly, on the Nasdaq from 2000 and right now.
Let's look at it. I'm bringing up the monthly, and there are there are some uh, traits that are similar in terms of the fact that you had a catalyst. This is 99. Okay, so if what we went through with the COVID, whatever, was a catalyst for easy money to be pushed into the market, well, back here in 98, the catalyst was Y2K. They thought, oh, okay, the computers aren't going to be able to make the switch over to the new century. Look it up if you want to learn more
Hmm.
about it. But again, that pushed what was unprecedented money back then. It was also a good excuse into an election year to try to get the economy running the year before. But what it did was it did drive that massive surge. It was, you know, in this case, was a triple off of that low. That once the trend line broke, I mean, let's just do it like that again. There was plenty of time. That's one the one takeaway on that with Nasdaq, which is the concern currently, is you break the trend and then you break down. This the ultimate kind of continuation resolution of this whole trend is pretty nasty. It's not a fun place to be in the markets when month over month you're just getting red candles and you're getting dead cat bounces. But this is the thought process I have for the current levels, where that in Nasdaq, we're looking at Nasdaq, the Nasdaq 100 index. Once you had the initial low, like you were saying, established consolidation, well, you broke it down. This is where the acceleration happened, and now let's lay over some ratios because you do have. This was where those all-time patterns seem to be really effective. If we take just a simple retracement, this is call that the Y2K low. You could even say 1998 back here, early 98. That was the low, but again,
Hmm.
you go off of that spread.
That's the March low I'm comparing now, right?
Yep.
Like we just bottomed out. Yep.
And let me just make those bigger. But you go off of that spread. Okay, you're going to see a lot of similarities. Like you're at your 382. We're not even at the 382 yet. Actually, that first thrust down was at a 50. You could drag this back where if you want to get line it up with the 886. Let me do it this way because I think it's helpful. This will be the way that I will look in the event that we break down. Something gets crazy. The market gets really nasty. Goes into the super malaise that I think I've been talking about this malaise for a while, but
Hmm.
the if we get into a real malaise, I mean we're gonna feel it. But you're let's bring out that 886. Like if you go to say the 94 low, there was some debate on when this bull market really started. A lot of people thought that this bull market started at the 87 low, which is all the way back here. Imagine
God,
the 87 low, the crash was 215 down to 140. That was the Nasdaq 100 crash in 87.
it's so insane. I mean, like, but it was percentage, right? Percentage change was crazy.
Percentage
Um,
change, but again, that was, but and that
People
was
are so desensitized now, to like crazy swings,
yeah,
but they're not like putting into account like how much more money there is, more leverage, and access to computers has matured, and that was kind of helped cause the 87 crash, right? It's like more participants starting to be able to use computers to trade, right?
yeah, there was a lot of that. Actually, you had I don't think you had circuit breakers back then, and
No, I don't think so. Yeah.
you had some of that where it got backed up, where you simply could not have buyers. You could not, you had a lot of issues where you did have more of the technology. Back then, I was on the floor in a college internship where, yeah, we had computers, but they were like the old Apple IIs.
Hmm.
And I was in the options pit in Philadelphia where my job was to manually change the prices that the option market maker would bark out, and he would tell you, okay, September 20s up an eighth, whatever, and you'd have to change them manually. So that's not that automated compared to today, but that was a big part of why that 87 got as crazy as it did. So, but think about it on a percentage basis, that still only dropped like 30-40% in total. So if we're gonna worst case scenario with what we're looking at here, I mean, um, the 2000 crash for Nasdaq was probably the most devastating, one of the most devastating since 29. I think that was an 80,
Hmm.
84% 84% loss on the Nasdaq 100. I think the 2000, the 29 crash, the low was eventually, I think it was 89%. Was that?
And it wasn't even like, of course, like, that's terrible on price, it's loss in value, but the amount of time it took for all those assets that had bubbled and popped, it took like a decade before they recovered. That's the crazy part to me about the Nasdaq bubble popping, and that's what like makes me so, you know, I don't know, a little bit more open, I guess, like not paranoid, but just a little bit more aware of like what could happen one day and why buying high is such a bad idea. Because what happens if it ends up we get one of these market cycle tops one day? Maybe it's 10 years from now or 20 years from now, but we get that where wow, the market one of the index funds takes a tumble 88%, but then takes a decade to recover. God,
Yeah, I would say,
just to break even.
yeah, it really was. It wasn't fun. It wasn't fun. It was a lot of garbage action. Sure, there was movement, but you didn't, it took you, just think about it, 10 years to break out to all-time new highs, and
Yeah.
15 before you really started doing
Yeah.
something. So it was only 5 years ago, people, we were half or more than half of where we are. So this is the breakout of the last 5-6 years, okay, has been historically significant. Um, I would say that if you are going to compare, say, that tech bubble crash scenario, well, we're not at a 382 yet, but this is the relative level that you compare it to. If this is the Y2K bottom, let's say that's where Y2K started. Interestingly enough, 2019, 1999, a lot of 20-year cycle things going on here. But if you were to, bring your spread of ratios into there, you're not even at a 382 yet off of this low. That's your 382. So you go under this 382 level. That's okay. That's where things can get bad. That's why this current range that we're in, basically the recent low at 12.9, almost, I wish it would have hit that 1618. I would have felt a lot better. But you are starting to develop kind of a bunched up consolidation, congestion that looks like this. Looks like this area here. And this is what we
Ooh,
want to look for.
Nasdaq session lows.
So that's long term. Okay, I'm going to break the uptrend. Same kind of a thing. I think um, that's the most aggressive uptrend. That is the COVID run. You have broken that, but harmonically and from a ratio perspective, if you're going to get a full reset retest of that COVID move, it goes to the 886. And I'm, not there yet, but just so that people know, in case um, you're wondering what could be the nightmare scenario, just come
So
back.
I'm seeing like the anchoring on the monthly. Like, were you in plot? Were you intending to anchor from like the 2018 low or the COVID crash low? What do you think would be most appropriate anchoring?
I think COVID, because the COVID was the stimulus. You could go off the
Okay.
2018 low.
Well, I think on
But
this one, on this chart, you did go off that, right?
yeah, you go 2019. There's the COVID low at 2020. And you're right.
And I think if you did that, you did hit a 382, did you not? If you anchored that way?
I thought you missed it by, again, 50 points,
Oh, okay. Okay, cool. Yeah.
which the other one didn't. So the other one hit the 382, which is, kind of funny because when I had when I first was going through that Nasdaq correction crash, the concept of the 382 trailer, that's something, it's like one of the first things that I really noticed of that trends and major continuations from a harmonic perspective really had to hold 382 levels. If this is going to be a larger trend, the strongest trends will retrace to a 382 like this. Get back here
Yikes, Q's session lows. Woo.
and keep going.
Yeah, I don't see. There's no reason why the Qs would stop here. It should go straight down to 342. It's literally in outer space right now. Or there's never been a time in history the Qs doesn't go to 342 after falling below 348. Jay.
Q's chart actually a little bit uglier because
Yeah, dude, look at the daily 200 moving average, double top. Like you tested it once and you dumped and you rallied again, and we tested it once more and hidden bearish divergence while regarding the 200-day simple moving out as resistance for the second time. Dude, that is so bad. I mean, I hope we turn into an inverse head and shoulders, my God, but just how often do you just fall below your 200-day simple moving average? Just like this and just regard it as resistance. You just don't do that. You haven't done that since 2018 before we dumped, and hit that crazy low, the low you were anchoring from a minute ago.
yeah.
So
Well,
bad.
I think you have to break the structure. I mean, the same way that you form a W or an M shape, um, we can speculate and say, oh yeah, that breakdown could get us to, to much lower levels. I think we have to get to the numbers first because, um, QQQ did the same thing as the Nasdaq index. Of course, they're related. It fell
Hmm.
just shy. And even if you don't know about the harmonic patterns, the 1618 extension, again, off this that October rally up to the peak. All right, that's the whole area you want to consider. That's your triangle, if you will. But we do have a pattern here where, again, that's everything. That's your whole consideration of, think of it as just this whole action from October is one cycle. It's not over yet. Is this going to be a correction cycle that continues to go lower until we hit that 1618 at a minimum? Of a downside, that would be the maximum I would consider. And if we violate it in a large degree, then yeah, default up to your longer term time frames where you're going to challenge the COVID rally. I mean, it's just there's nothing. It's almost kind of binary. If this or if not this, then that, because we're either in this weekly 1618 consolidation correction, or the whole COVID thing is going to have to be retested and paid for. Think of it that way, much like
Hmm.
Y2K was, where it's like that. It's either your 382 or your 886. That's the from a ratio perspective and even a trend perspective. If you want this long term trend, here's Q's on a weekly going back 5 7 years. Um, the other thing that will happen is you revert to your long term uptrend, which isn't a stretch. I mean, that's just, again, under that level, under that 320 level for the Qs. So if you want to know what the possible ugly scenario is going to be, a break under 320 and how it does that will tell you, and it'll give you plenty of time. Let me show you this, Mitch. I think you'll like this. Is
Hmm.
Apple's been. Let me go to Apple because the other thing about this market is there's only a handful of stocks holding these indices up. Apple being
Yeah, that's what's so weak. Just, ugh. Man, what an uptrend though. Just ungodly uptrend on Apple. It's ridiculous.
Apple is even on the weekly, monthly has to take out. Apple would have to break down substantially. That's the other uh, obvious kind of indicator of what these big trends might be doing. And again, a retest back to 160 might be like nothing. It'd be nothing, and then keep going. The daily is more interesting because we've talked about these back-to-back patterns, and I've mentioned we have a crab pattern. Let me blow this up. Everyone can see. We had a crab pattern that completed essentially back in November around 175, and we did not get to even target one. We There's the exact completion. Your 1618 was at 163. You went as high as 175, kind of overshooting the crab.
Hmm.
Did not even get to target one. And now this gets me to some of my comments on crypto as well, where it looks ugly. Okay, market's breaking down. I know that, but we have some bullish patterns at a high level against a bearish pattern. This bearish pattern should have taken you down to target one on Apple at 146. It got close, really close, not quite there, but got to 150 and change, but right off a beautiful bat. And we could just be banging between these levels of 150 on the downside and 175 on the top side for Apple. Been a couple of, clear resistance triggers up here that uh, the market could look a lot worse, all right, than it really is, just as this continues to go bang from support to resistance. And if Apple and the rest of the market's going to be in trouble, it's going to be under these lows. It'll be under 140. It'll be under
Oh yeah.
150, because there's nothing. You go to the left of the chart, there's nothing there. I mean, it's
Well,
amazing.
the issue is like you've got Apple, but then you've got the other big ones, right? Like Microsoft and Google, and their charts do not look near as good as Apple. They look kind of like more like the Qs and the Nasdaq, right? I mean, uh,
There's
even
Microsoft.
Amazon. What's up?
Here's
Oh God,
Microsoft. Yeah,
Amazon. Yikes.
on a weekly, probably even better on a monthly. There you go.
Yeah, like Apple's the only one of the big four, kind of the largest components of the Qs, the market drivers, if you will. Um,
Microsoft's
Apple's the only one that's kind of good.
Microsoft's a good one to look at for the 2000 example. Okay, we go back to .com. There was no greater stock than Microsoft. I mean, it was the king. It killed Apple, and people, I don't think they realized that Apple was in the dirt. Microsoft had to save them, keep them in business.
Hmm.
But so
They
Microsoft,
came up with a tablet too, but Apple like marketed it better. Like they were the ones with the innovations back then. People don't know that Microsoft started the tablet, and then Apple took that idea, what they already had created, and marketed it better. And then the iPhone and stuff, but that was like almost a decade later.
yeah, I mean, it took the second coming of Jobs to turn that whole thing around when
Hmm.
Microsoft had already basically conquered and was king.
Hmm.
But I will say this, okay, even as great as Microsoft was, probably one of the champion stocks of the 90s, that once we topped out, And that was, what was that, November 99? Yep. We came down. Here's a perfect example of what happens at your all-time 382 tells you a heck of a lot about the larger potential. So 382 was at 37. We hit that, within 4 months of topping out. And so the initial thrust was pretty severe. Some big candle action that, on the monthly. And again, this is the kind of thing that if we're going to see this market breakdown, it's going to be like this. And you will get a candle, we'll get a big candle like this candle, that candle right there, where once you took out these lows and closed well below the low, that was around 44 was the breakdown point. You closed at 34, 35, and then you went into, again, what I like to reference as technical malaise of sideways to down grinding consolidation. Okay, I think that was the low. It's 7, 8
That
years
gap
later.
down that month. Good God. Look at that. Like the close of that 1 month to the next one, before the collapse, really, before that huge impulse down.
Yep.
That's nasty, dude.
And so you're in this area, I think, with the larger market that, again, you're going to break this range on Nasdaq where we are now. We're not there, but let's quick compare it. Go to my auto. All right, would look like this. This is the equivalent range for Microsoft, and you'd get a big candle down to start it. I mean, it's that's the thing. Again, if you're going to have that a really ugly stock scenario, you still need to do the breakdown. I mean, you could have you close under 270. Okay, then you might have the 3 bar breakdown scenario after topping out 4 or 5 months ago, 5 6 months ago. Okay, that's the kind of thing I would expect if this trend is broken. So keep an eye on it. Amazon, actually, I wanted to bring that up because that had and was bouncing nicely off of some patterns, but the long-term chart. Let's start with the long-term chart. Um, pretty pretty clear of been stalling
Yeah.
after the COVID
That-
thrust. It hasn't done anything for 2 years. That's
Yep.
something where if Amazon can't go because it's such a leader, all right, then I'll get concerned. If
Yeah,
we,
2040 if we don't hold.
yeah, if we another one where you're looking for this thing to break down with a close, well, you could say even a close under these lows. A close, a monthly close under 2,900 would concern me. The the positive thing about Amazon, check this out. You'll like this. Beautiful crab pattern. Here's what Nasdaq should have done. There's your October low. Beautiful crab pattern. Did the type 1 move up to target 1, 2. Came right back down for the full retest right at XA, and then HSI coming in right on the dot for the reversal up to target 2. Now we hit target 2 and we're rolling over. So
Hmm.
in terms of the 1, 2, that's over. Okay, for reaction reversal off of this pattern. How do we get this thing to move again? Well, we got
Maybe
to.
a back test of 2920 or something, a spring back test. Because when you broke back above the inflection point of 2900,
Mm-hmm.
you just went straight up. The market participants never spent time back testing that level of support. So maybe you get to 2900 and actually hold it and never fall below it again, because you double bottomed below, like you fell out of the massive range, and that's where you completed that double bottom, both of those bottoms.
So
So
Mitch is saying come back because we broke the downtrend. Mitch is saying come back, retest that around 2,900. I would not be surprised to see a 2814 retest. and then you go. So a lot of static. I mean, there's a lot of static price action here where, especially on your monthly chart, that is not like this is. Let me clean this up. Um, this overhead resistance, clear overhead resistance, is just one candle away. I mean, you break some short-term support of these prior bars, yeah, then you're going to get another scenario of going back to the 886 of the COVID low, which is, if we're going to connect dots on Amazon, I think people will like this. And you can do this with all of your favorite tech stocks. Um, do just take a look at them and say, okay, what have they done since the COVID low? And what is the formation? Well, here's X, there's A, here's B, C goes to your peak all time, setting up a shark again for the
Oh yeah.
886 at 18. That's if we get this breakdown. That's if, look, if this is um, not going to make progress. The other thing, I think Amazon's a great chart because look at look at all of these this resistance and the inability for all of these monthly candles to close above 34, 3,500 every time it tried.
Multiple fake outs. Yeah.
That's huge. That's the longer to the distribution, the bigger potential for the markdown and the
Yeah,
fall.
you had two up thrusts, like of the range, like the breakouts, and then they just both failed. And it's just kind of like a massive double top from the peak from July 2021 and then November 2021. And now you are, I mean, just again, this whole 200-day simple moving average it just got rejected, like for real rejected. And it never does that. It's just such a rarity. Like you just don't, one does not simply reject the 200-day simple moving average on something so bullish for so long. It's always support. If it falls below it, it normally spends very little time below it before going higher and getting back above it. And this time, just, yeah, couldn't do it. It's actual resistance, kind of.
There's a 1 minute crab pattern right now looking at Nasdaq here, trying to take out new lows for the day. What's your 5 minute look like? Anything down here? Not a heck of a
Yeah,
lot,
kind of
but
off. But yeah.
the I think S&P 500 though has the pattern. It is a verifiable shark pattern that you got a few things going on where that's flashing alternate bat or sorry, a bat pattern a little bit higher, but let me just focus on the shark. Shark pattern still in a let me bring that back here. There you go. So shark pattern has been in a type 2 reversal after really all year doing a perfect type 1 reaction. Came all the way back. It hit the hop. We talked about that on Tuesday, folks. Go check out my session from Tuesday. But now we're back up, and I've been saying, okay, we're going to maintain this trend line going up, heading higher, or what? Are we going to roll over? Um, we hit an overbought HSI, excuse me, amplified RSI, just hit to the overbought extreme. So again, banging against resistance, probably just a zigzag. I'm looking for this thing probably to come down a little bit more on, this is daily too, on S&P,
Hmm.
get you under, 44 or maybe as low as 43. But this whole congestion zone, everything here has to hold, and we still do need to see 47.40. So, I mean, it seems ugly. Nasdaq's a lot worse than the
Yeah.
rest of the markets, but I'm not, again, for that whole larger ugly bear scenario, you'd have to just take out the yearly lows, and that would be it. That would be more than enough to then if you want a bear market, it happens and it starts underneath those lows.
Yep, under 12.5 for the Nasdaq. Yep, that's. But I think we are already in the midterm downtrend, like undeniable. You have made consecutive lower highs and lower lows. So until that changes, um, and I don't count. Like if you're in a downtrend and you make the same high pretty much, I don't care if it's slightly higher high. It's very clear that it was the same high. I mean that doesn't count. Like the same high is, it's like neutral. It doesn't like help with a trend reversal at all. It has to be like a true higher high. And then after the higher high, we must then make that higher low and then really start pivoting and then retake out that new high you put in, right? The same high. Those are all things that have to happen. And that was like where you were looking at. Maybe if we're fortunate and blessed, we get a go down to 13K, make a higher low than the lowest low, and then pivot and start rallying there, and then eventually take out that 14.5, this steel wall we've created now. Like these two local highs.
Yeah, it's again, you're pretty clear with not only violating the uptrend, take out if S&P gets under 44, even though you've got numbers that are down there. You don't want to see that happen. I would rather see this thing maybe stay in this range, 44 to 45, 46. If you don't follow through here, all right. Again, it's more about time than price because the the nightmare scenario, the big corrective scenario for S&P and like all of them is back at the current lows here for this year. And then that you break down there, okay. Then you go and you can say, all right, I'll retest the whole COVID move. Those are the scenarios that I'm looking at, which is a pretty big range between, okay, consolidation scenario one, we still retest support currently and not surprised when we pull back um, 40, 50 points and swinging left and right like that, like S&P is. I mean, S&P is moving quite a bit intraday. Let's bring up this 5 minute chart. Just the last couple sessions have been, I mean, today it's 40. There's a nice shark. Here you go. S&P on the 5 minute has been extremely harmonic, though. I will say that. And here's a beautiful shark deep crab on the 5 minute, where this is a type 1 corrective move. Let's see how this shapes up. We'll go to type 1 and then come back, probably retest a little later today. You're at 44.60. Today's support's around 44.47, something like that. But again, I think the larger breakdown on the daily is not only you take out the lows, but harmonic from a harmonic perspective, the failure of that bullish pattern would be a big problem for the uptrend. So, S&P is probably for stocks the index to follow to get a good gauge of how severe is this going to kind of break down.
Yeah, yeah, definitely. I mean, I don't know, man. I think it's just kind of between 4,500 and 4,300 on the SPX. It's just, I think, kind of a thin order book. I mean, I think it's a most of the time straight down, straight up. And I think you just confirmed that 45.45 is a very, very real discernible resistance, as we can now start actually seeing it on like the peak on more significant time scales. But you know, we'll see. I've just I wonder how crypto fares with all this, because let's see, how far away is the S&P from its lowest low? February 23rd, when it bottomed out at 4,100. From that low to literally where it is right now, it's up 8.62% from its lows. We go from that same low in crypto on Bitcoin, February 24th. Wow, dude, that's crazy. Where Bitcoin is literally right now from the same low, the benchmark, the S&P, Bitcoin is up 27% right now, from the same lows. So a massive out 20% outperformer from the S&P 500. So, just throwing into, you said the S&P is a good metric, benchmark. And the one crypto to rule them all is destroying it, in terms of performance.
And Bitcoin's really, you go back now 4 months, has held the fact that it's holding here. Um, I still say it's a time thing. It's not so much a price thing. And we have a little dip down. We're retracing the gains from the end of the month. But if you look at the monthly candle, which I think everyone should be aware of what these monthly ranges are. Um, the real current support on Bitcoin is around 43.5, 43,000 of, they just trace it out. This line here is just a static price bar action. The fact that we've held one, two, three, this is our fourth month holding the low, just hold the low. I don't care what Bitcoin does, hold the prior month's low, or even better, hold the 886 of the prior month's low. But I would love to see it hold the body.
Just
And
stay below 42.
yeah, I think it's about this 4 hour pattern for Bitcoin. I brought this up. You're back to back now. Well, there's the Gartley in the 4 hour. I like that at 43.10, but it's is it hourly or, oh, there's another. Yeah, it was this. Oh, here it's the alternate bat. We had an alternate bat. This is the one I traced out where on Tuesday I was saying there's a reaction. And now we came for the retest. We hit the hop with a crab pattern, a deep crab. I like it. 43. I'm okay with this. And even if this bangs around 42.9, 43, back up to 45, you could spend a week like this easily, where you come off of these patterns and then back down and do that. That would be probably the healthier thing within this crazy interest rate market as interest rates try to top out, which they're going to try. You're going to make a run at the numbers we talked about to start the session, which is like 10-year goes to three and change, and your mortgage rates go above five. Those would be big events, big psychological events. Like, it'd be tough for me to see something explode beyond those levels, even with the Fed raising rates, but we'll see. But in that, that's going to be a challenging environment. But I just think it makes it a little more bumpy. I don't. I'm of the opinion that Bitcoin, if it was going to fail, it would have failed way back in February, March. You would have made that deeper run um, down at these lows in end of February. So I don't.
Yeah.
I just expect some bumpiness.
Oh yeah, for sure. I mean, you're still like clearly, I mean, in the consolidation phase. I mean, like even if you fell below 40K, as long as you made a higher low than like 37.7 or whatever, you understand like you'd be making like third consecutive higher low, which would be like a classic accumulation structure and like like the rule of three, seeing things in threes, especially discernible peaks and valleys. And after that third peak and valley, you get resolution. Like you get those patterns like the three rising valleys or the three falling peaks or the three drives pattern, right? Where there's bullish or bearish. It's always the one, two, three. Like I think you saw Bitcoin on the third peak, April 15th, 2021, right? It was one, it was two, it was then three, and then that was it, right? Um, I mean, to me, I just see that all the time. Silver did it. Silver did the same thing where it created a massive harmonic, it broke the supply line, and then had to make the third valley before that much larger wave up, which I think was the resolution of the accumulation. So yeah, I think Bitcoin could end up doing that, and that would be perfect composite operator stuff to make all the market participants that aped into Bitcoin after 42K was broke to make them lose their minds and to offload their position to the composite man at a lower price that he wants it at, and then eventually the major markup after that. So just a possibility scenario.
Your 4 hour time frame, I like this Gartley right off the top. Still in reaction mode, but you do have confirmation. That's all at 43, 127. We'll see how this come back on Monday. We'll see how that is. But I would look for a reaction up here. Target one, maybe target two, and then retest it by the weekend or into next week. Again, I don't think it's going to be uh, any explosive fireworks. You're going to have to pay for the move from the end of March by really checking back, digesting. It's a 10,000 point move. Actually 15,000 point move off the low from February. That's a heck of a move. That I'm not surprised to see this thing bounce around. It should be something like this. And the thing that I do want to say is that I'm glad we're seeing some of the retracement patterns that I talked about last week, where we were up at these levels looking at some resistance, and I was saying, all right, let's think reaction and let's get some kind of a pattern, maybe a bat. We're getting a Gartley, which is good, better even because of the ABCD dynamic.
Oh yeah.
But we're still going to take time where 46 on the top side is your resistance, 43 we're scraping short-term support now. But again, I think this is going to just continue to bounce like that. Whereas I was showing Luna a second ago. Let me
What
go
a
back to
beast,
that.
man. A man among men. Well, it had been. Yeah, it finally pulled back today. It's down 3%. Still above 100 though. God.
Yeah, Luna's another. Here's the 4 hour big crab pattern, and it's just doing beautiful type 1 reaction. That's all on the 4 hour. And this is the place I'd be looking for opportunities under that 104 level. We've seen it time and time again with Luna. Here's something for the crew. Here you go, chat. Some real beautiful 60-minute patterns. Currently, a beautiful crab at around 103. And this could easily do your
Beautiful, man. Beautiful.
one and then come back for a two. And then later this weekend and next week, you get the continuation. Something like that. So
I guess it
it's,
depends on Bitcoin. Well, maybe not. God, you're right. It's like one of the only ones where you can't say completely. Ooh, it depends on Bitcoin because Luna doesn't care. It hasn't cared anyway.
yeah, I think the Bitcoin, I want to see that keep moving. I think the Bitcoin acceleration is going to come above the recent highs, above 48. Where is? But you have a lot of these interesting alt situations. Here's another one. Here's Sandbox and hourly beautiful crab. A lot of altcoins have major patterns at the moment on this recent pullback. Sandbox on the daily is something I have mentioned where it's parked itself on this big XA 886 of that bat pattern, and it's done a type 1 up and back for the 2. And this is one of the situations I was mentioning where I want to see a micro pullback, is what I was saying, and now we got it. And so Sand, take a look at it against that XA level at 278. There are a bunch of these that are doing this. They're retesting the Type 2 a second time. We know Type 2s, they can take extra time. I was mentioning on Tuesday that a Type 2 can be 3 times as long as a Type 1, just from time's sake. And you can have a double test, no problem. The other one, if for those that you want to speculate in dog coins,
Mm.
Doge is had that big thrust, and I mentioned I had tweeted about this where someone had mentioned this going from like 9 or 10 to 18. It hit 18, but pulling back again. I keep adding. I'm adding to this because this 13 level on the shark. There's several things here on the daily.
My Doge.
Yeah, that I am back in here now for the first time in, I don't know, maybe 9 months. And it also has to do with this. Your long-term downtrend. We could push that out as far as possible. Okay, really trying to base down here where I'm looking for an eventual move. I think I said 26 cents. from this 13 low, somewhere, like in this area. And it's going to take
Yeah.
time. It's going to take time, but there's a lot of these patterns that have lined up.
Shoot, man. I think if it breaks 1787, that's like a soft resistance. I think the major resistance is like 34 cents. I mean, it's like look at the historical price action between, you tell me, between 18 cents and 34 cents, what happens almost every single time except once or twice.
Yeah, you're like this.
It's like straight up, straight down. But
And
yeah, it was just ridiculous to see Doge run up to 17.8 cents right there at the top of the zone of inflection, and it just like closed in reverse with a bearish engulfing candle, and you're like below the zone of inflection right now.
but it's still, again, I think the alts on a percentage basis for trading speculation purposes. And here's look at engine going up 7%. And we had a lot of these. Look at this. Here's engine coin, a mini bat pattern. We had a lot of these. I talked about this last week of looking for the reactions, and they've done them. Reactions over on a lot of these little mini bearish patterns. What I'll be talking about on Monday is then getting ready for the return back up to retest. That had one. Here's polka dot. Polka dot on the daily had a crab pattern and ran into its target one. Um, but XA levels around 17. So look, draw your XA levels out like that. Here's target one off of that crab pattern. And expect these to be range bound, but if dot comes back under that 20, gets to that 17 area, expect another bounce. This stuff is, I think, just working its way to form longer term bases after
Yeah, I
stuff
just
like this.
yeah, I would feel so much more comfortable if we could make an effing higher high on some of these altcoins. Like they're, I'll scan and some are had done that before this big pullback here yesterday, day before, but a lot of them though, man, are just like they just completed another lower high and they've rolled over. And yes, they have not yet made lower lows, but dang, that's I'd feel just better, like completely if it was, you know, maybe higher highs
Yeah,
on the daily or
it's going to take
something.
time. It's going to take more time. I don't. I left everybody on Tuesday with Zcash at 165, and this is what it did since then. Go to the 4 hour. Here you go. We had a bat pattern. I don't know. I think a lot of people remember what I was saying. It was kind of like Bitcoin. We had really a skewed move, quick reactive move. But hey, that's a beautiful 4 hour, about an 8 bar reaction from terminal bar to target one. And then I was saying, look for this to come back down to the hop, 165. We got to as low as 157 or something, but 164.29 was the exact number. And look for another reactive move off of this low. Zcash again, another one where it did hit 188, maybe target to 198. That's something we'll come back to on Monday, and we'll take a look at. But I think it's, there are a lot of opportunities like that where they've come back, retested. Here's XRP for another retest. And I've always said XRP is probably one of the best weekly charts in all of crypto, but it's going to take probably the longest or be one of the longer scenarios to realize. Here's your Gartley on XRP. To realize your target 2 level, I think XRP is going to take months. It's as they hold it down and whatever they do with it in terms of the SEC decides to do. But for me, pattern's already completed, and this is just an issue of time where we either come back one more time or we just hold this 70 level and target 137 off of this Gartley as a minimum. So, absolutely a lot of these lining up. There's the other one that I talked about last week, which is YFI, which is a big pattern
Hmm.
Daily. There you go. Big bat. This was a back to back. Look, alternate bat to other bat. Coming. I've been saying for a long time. Look at this, right around 20,000, and it's just another pattern. It's going to take time to base,
Yep.
stabilize, and target two eventually here is 33.
Yep. 30 to, yeah, I just looked at a peak from back in November 2020. Yeah, 30, 33 area.
There's
Yeah, that one was like about to collapse. If it didn't hold 18K, it was going to 7,500 easy, and it held crazy.
Yeah, I think that for me that's what it seems like. It's a lot of these are trying to just hold. They are holding. They got clobbered over the last 6 months. A lot of them. Here's another one, V chain. Got clobbered, stabilizing. After the 80% reset. Uh, but you've got lots of patterns here. I mean, V chain's got a crab and a bat, a whole bunch of stuff around 4.5 to 6 cents on the top side. But you're closer, much closer to the support. I talked about this little. Here's another one of those mini bearish patterns that developed where off of this I was saying, okay, look for the reaction, and we're retesting this support, and off of this bearish pattern helps the case because after we're done the reaction, you're going to come back, retest. That's what gets you back up to 10, 11, the target ones off of that the prior bullish pattern. So, a couple of back-to-back pattern situations here for V chain that say more time, but still, I think in a good spot. That you're not taking out the lows. V chain, if it holds the 5 cent level and we're 6 months from now, but we're still at 8 cents, I'd probably feel even better and just say that these are in long-term basing situations. That I think the only problem is that people are expecting and want this stuff to do moonshots. It's just not in that phase at the moment. It needs to do stair stepping.
Yep, absolutely. It reminds me of September of 2020. This market, right? They had created patterns like so. I just like posted my VeChain chart to you, right? And like, I mean, this took 270, almost 300 days to develop. And yes, you finally reacted. Yay, good. But like, you can't expect the asset. You shouldn't expect anything, but you can't expect even after that, all that, for it to just go straight up to 13, 15 cents. I mean, it ran up. It went up like, my God, dude. Since and the 113, the literal textbook pattern completion zone, from there, from that low to the high, VeChain went up 120% in 35 days. What could you actually expect as a market participant looking at the daily time scale? 120 not good enough for you, chat? Really? Yeah, these things pull back. Maybe it back tests 6 cents, that inflection zone to regard it as support. Maybe not. Either way, as long as it makes a higher low than 4.4 cents, that is accumulation. And again, you go back to September 2020, all these altcoins were doing very similar things. The same type of sentiment was there. People can't, they're in disbelief. There's no way Litecoin's going to go up again. It's been sitting here for too long. But, right, everything that we teach had set up and it was presented and it was on that person to take action. And if they did, they made life-changing money on that run. So far
Yeah,
exceeded the targets.
yeah. Here's another, and again, it's probably something to really think about if you're going to participate in this kind of market, where when we get the moonshot or you get the massive move, you have to be thinking aggressive management. This is this scale USD. I had mentioned this, but it was just garbage. Like down here in February, this thing was doing nothing, scraping at the hop, and then it did a massive explosion, going from 10 cents to 32 cents, 33 cents, a 300% move in. I mean, off of that low, and that's even being kind, 35 days. So that kind of thing where you see your coin skyrocket 200, 300%, know that it's going to have to
in a
come
month.
come back and pay. It's going to have to pay. It's going to have to pay. For scale, we still have a beautiful deep crab that this could be the start of something, but reaction over, come back down. Now we look for reversal on the XA level at 17.4. You're still trading 21, but that's a 50% correction off of the high from a percentage basis. Those are huge swings. You have to be mindful of how crazy that is. Crazy movement, but that's crypto. From a harmonic pattern framework perspective, we still need the type 2 retest, get all the way back down there, and then you could go. But you're talking, talk to me in 30 days. Talk to me 30 more days from now. Um,
Yeah, let there be resolution. Could there please be a back test of 16.5 to 19.2 cents? That's the zone of inflection where historically the asset has tested as resistance or tested as support and massively marked up or massively marked down. So when you broke that resistance, the date of on SKL, March 29th, there was never a back test, but now you're very close to back testing, and I think it would be extremely healthy. It would be might maybe a great opportunity to for a trade setup because maybe on a time scale you could while you're testing that you could have hidden bullish divergence. So a continuation implied while you're back testing a spring as support. That's amazing. That could be a great opportunity.
yeah, this is
And
just
another higher low. Sorry.
yeah, no, that's right on, and that's exactly the situation for most of these altcoins, especially the ones that did a nice reactive move off of the low after the massive correction. Which I mean, look at scale. Went to one was what was that? It was 5 cents to 120, back to 10 cents. Okay, that shows you where
Yep.
the value is. But
Trader's market. Like
yeah,
that's why I try to emphasize to everyone. It's a trader's market. Unless you're talking about Bitcoin, Ethereum, and maybe, congrats on your research on Luna, Novogratz. But like, dude, there's 18,000 of these things. Right? Dude, they're not things you hold. They're pipe dreams. They're all delusions that you think it's in the next Bitcoin. They're not. They're things where they're great. They're gifts for us because all we can do. There's no way to value these assets, right? You can't. There's no price to earnings. No earnings per coin, right? No forward PE. No balance sheet. They don't report quarterly their revenue or profits, right? None of that. So all you can do is be like, it's a good project, but that's speculative. But so what we can do is look at harmonics and deep retraces and things that actually make that's a way to actually analyze these. And I think it's a trader's market where you enter, you have your trading plan, you have your stop loss set up, and you answer the reasons why, and you have your take profits, and eventually you exit. And sometimes what will happen is these cycles that we identify on traditional markets end up being identified in the non-traditional market, which is crypto. They'll bottom out just like a traditional asset. They'll rally like a traditional asset, but they sometimes blow past and exceed the traditional targets by triple, quintuple, sextuple, right? So that's the hard part. When these things actually truly bottom out and we start going into that acceleration phase, gauging targets can be tougher, right?
yeah,
For upside.
yeah. Here's one on Monero. Perfect example. This has been
Such a
strong,
beast.
but it's got that exact kind of a thing where you're up at target one, maybe target two is about 260. But I would start to look here. This is real indicative of a type 1 reaction that it's either going to be around 212, 220 where it is now, or maybe as high as 260. But from just a framework perspective, the way that we want these things to have the retest, I would expect that reaction to end fairly soon, maybe in a week, maybe 3 weeks, and then come back, retest it, and go. And I always come back. There's a couple of the massive patterns that really, for me, from a harmonic pattern perspective, set me off of saying, okay, crypto is really, I can't ignore it anymore. But I always think that I want to see pattern situations like Bitcoin gave us before the big move. And Bitcoin from 2017 to 2020 at the COVID low went through a whole series of, pretty dramatic 100% move, 50% correction, up, down, zigzag. But ultimately, it ended in massive formations and patterns that were undeniable. And that's the thing I want to see on a lot of these, where you go through your consolidation phase. Even off of this from the 2018, you did a type 1. And like Mitch said, a lot of those reactions go higher than a minimum level. And target 2, in this case, on the weekly, was beautiful, but still had to have come back for the retest. And that confirmed it. Yet a secondary pattern. I wish this would have given you a secondary test, but at least you had two massive weekly patterns. And then it took off and started to go. Point being, with where we are in crypto, okay, we want to look for those markets that have the big patterns. And note, even if they have the big patterns, they're going to take time. We're talking weeks, like April 2022
270
now,
days, or
270
way
days, yeah,
more maybe.
before the home run can even take shape. And so if this is, I look at a pattern like this first one in Bitcoin as kind of like XRP right now. I think XRP is kind of relative to Bitcoin is like right in there, from a pattern perspective, because of its weekly formation. And just show you this, because
Yeah,
it
no one's buying it though. God, I
it's
mean they keep. Yeah,
it's tough to see. It's tough to see. There's the weekly Gartley and XRP, and who knows? Maybe what XRP does is, spends the next 8-10 months doing this and gives you another pattern and then explodes. But at
dude,
least
XRP. God,
you
sorry.
have it. No, no. I just think, to your point of trying to figure crypto out because you don't have the traditional metrics. We're going off of traders' actions and trends, that we're going to see the setups. The patterns, they will present themselves like this is in XRP and still take a whole bunch of time.
Yeah, XRP has not made a higher high since April 13th of last year. That's just like so disappointing. Like, I mean, at least Bitcoin made a higher high recently. At least Ethereum made a higher high recently, but XRP, it made a lower high technically than February 9th's high. And before that, December's high, and then November's high, and September's high. My God. Then May's high, then April's high. But yeah, I mean, it's literally like everything you could dream of on XRP is there. It's set up the exact same way Ethereum to Bitcoin was set up, all the same technicals. It's just someone's got to come in and buy this stuff, and I don't know why, but you said time, and yeah,
I think time. I mean, you had the same thing. Here's the Ethereum situation that had a big bat pattern too, on the weeklies. I mean, I just think if we're looking at these altcoins that have done the 80%, 88.6 full reset like we've seen, we still can't be surprised when you do consolidation for, oh, I don't know, what's that, 100 weeks of where you were. So when we get the moves and you get the thrusts, off of these lows like we got last week, and now you feel like you're getting kicked in the nuts as it pulls back hard. It's just these are reactions in the consolidation zone, I think, and that's not going to change until you get some much larger major developments. Some things like Luna, okay. Other things, like a lot of these others, not so much. So that's my point of where we are. I think, here's man, that KNC. Look at that. KNC keeps going. But KNC was another one where that looked like garbage going back for all of
anomaly. God,
2021,
dude,
and now this thing is begging for an 886, and I'm surprised to see that up today, but it's like this. I've been
what
drawing,
it held, man, so well. It held that 290 area,
yeah,
bounce off support. Yeah.
I've been drawing this bat for a long time, as
Hmm.
the target, and it's been, it was 4 weeks pretty much in the same point where it was back in March. But now it's starting to get going again. So again, a lot of these whipsaw moves on the short-term time frame look worse, I feel, than they are for crypto, just because that's what crypto is.
Yeah, yeah, and you all you have to do, just go to the 3 day and the weekly. If you're panicking, if you're freaking out about it, just go to this time. 3 day takes out all the noise. I posted that to patrons. Just a 3 day on Bitcoin or Ethereum, whatever. I mean, you look at it and you're like, what? Oh, what happened? I mean, yeah, it was a bearish engulfing candle, but you're still above 42K. You're still above the 200 simple moving average. I mean, everything's like literally fine, like on this market for now. Even with all this crap with the equities market, it's 20% outperformance of the S&P from the same February 24th lows. So
And
what
here,
happens if the S&P doesn't collapse and just holds on? Then Bitcoin's going to continue to outperform.
yeah, and I think people, as people roll out of the market because interest rates spike, look, I've been saying this all along. Bitcoin doesn't have to do much. It can go up, stay sideways, grind higher, and you get other alts to move because people are going to just throw money in terms of as a safety allocation. But it's just going to take longer.
Yield too.
Yeah.
Yeah, yield on your money, APY and stuff. And lower market cap, right? So it's much easier to move the meter of the lower market cap coins than it would be Bitcoin. It takes, I think that's maybe why Bitcoin's been churning so long. It just takes so much money um, to push it up, even though we're hitting like every effing day, we're hitting multi-year lows on liquid supply on exchanges. It's like it's been sometime like 2017 now, I think. Just keeps plummeting. His price stays stagnant. I think that, I mean, maybe not. Maybe like, oh, maybe it's never going to change because short selling, I think, has something to do with it where it doesn't show up. But like people, like real Bitcoin, not derivatives and stuff, um, there's like a lot that's being taken off exchanges, and you got to wonder if that's ever going to give or translate into a massive markup in price because eventually if this keeps happening, you think there's a threshold where it's like, oh, you're finally out of supply, right? I mean, if this keeps up, I don't know. Like, I really don't know these on-chain metrics that are so new and stuff, newer. Don't know how it's going to play out.
I think they need more time to really prove themselves out on these dollar levels. If you think about it, we were 18 months to 24 months ago where those metrics were measuring a market that was 100 billion, 200 billion. Now you're talking a $2 trillion market. Yeah, and they need a little more time. They need, I think they need 30 months, 30 years even versus the market, which has got 100 years of data or more
Hmm.
to compare trends. So you're having to go off of like immediate analysis, but still apply standard technical analysis. And a lot of technical analysis can be, again, more about the time. Even if the technicals line up, there's still, I think, a time phase a shift almost. I'm showing Binance Coin right now, which has a beautiful bat pattern, holding high level, from last year. Massive markup. I mean, Binance Coin was insane. Went all the way up to
Yeah,
650.
such an outperformer.
Still holding.
Yeah.
You're above 400 here, and
Yep.
no reason why over time holding this bat pattern and the long term support. I think Binance Coin easily does retest the zone, but retest the prior peak, maybe an 886.
Hmm.
But it could take
600.
6 months.
Yep,
And that's
for
the only
sure.
thing that people I think have to be mindful of is you're gonna need time. You're gonna need a lot more time.
Yeah, market can stay rational longer than you can stay solvent. I think that's a pretty good proverb to bring up, I guess, when we're talking about this. I mean, all you can do is be like, okay, we've identified the bat, the type 2 return at the inflection point with bullish divergence, classic bullish divergence on the daily, and then hidden bullish divergence on the 3 day, and it's begun its ascent. I mean, and off the literal pattern completion zone itself, Binance is up 22%, So, yeah, it's like he's getting back above 430, which is I think is the one of the most critical areas on this chart for now. I mean, above 330, 350. think 500 if it holds. Yeah, I mean, it's not gonna be able to do it if Bitcoin can't, rally. Maybe Bitcoin has lower to go. Maybe it's like maybe starting a bear flag on the 4 hour or something. But there's no discernible edge, and when there's no discernible edge on Bitcoin on the 4 hour, that and your like price actions like this, I just don't know like how much. Yeah, I think you could go test 44,400, but I don't know. I mean, the RSI is showing bearish convergence. Someone could try to argue that there's bullish divergence on the MACD histogram right now, though, on the 4 hour. I don't know, man. It's there. The lower levels of negative momentum.
Yeah, Bitcoin, look,
So,
Bitcoin has it has hit a couple levels where look, it's responding off to this 43,000 level with the Gartley, and you got a couple other metrics. Maybe we could this would be something we could get into tonight.
mhm.
That I think another 4 hour bar here, you're not going to need much to where you see this thing at least show you something that it's not going down anymore for now for the week. I kind of like where it is at the moment. Have just but for just a reaction, 43 up to 45 and change, and then I'll deal with the larger consequences next week. But again, we're just gonna keep, I think, gonna keep zigzagging. Let's see what we do. We certainly have to hold lows. You can't be under 42,000. 41,000 would throw that scenario off. But for now, I'm fine with it. Let's talk to me in a couple hours.
Yeah, really. Just
um,
gotta. Sorry.
no, I'm gonna wrap it up there. I just want to show everybody really quick, folks. Jump over to harmonictrader.com and become a basic member. Register here and get with all of the resource stuff we were talking about harmonic patterns. And the software we're working with is Harmonic Pattern Collection. For TradingView, everyone can get a free trial. If you've tried it before, would like to try it again, go ahead. Just send them a note and they will take care of it. So um, I'm going to jump over with Mitch tonight and be on his channel. Mitch is over at Mitch Ray TA. And let me show them your page. Most of them know. And Mitch, you're 7 o'clock Eastern, right?
Yes, yes, 7 o'clock Eastern.
So, Stephanie, if you can put Mitch's YouTube channel in the chat for everyone. And then you let me know when's a good time to join up, and we'll continue the conversation
Yeah,
tonight with some
I know you got
beverages.
stuff going on normally around then, so I mean, normal would probably be like 20 minutes. I'll try to go across the markets, get
Yes,
the big ones in, and then have you on like whenever you're ready and stuff. So
I'm good by 7:30. I got my family business taken care of,
sure,
so around then be good.
okay, perfect.
So
So just count on 7:30 to come on in, and I don't know if you want to have a beer, you can have that too. You can bring that with you.
I will
BYOB.
I will load the fridge this afternoon, so I'll be ready.
Excellent, excellent, man. Yeah, dude. Um, well, dude, I appreciate you bringing me on like always, and it's just how long we've been live.
Always great conversation. We have been live now over 2 hours, man. 2 hours, two
My
hours and
God,
change. So, but it's been great. And
I call it the TA time machine.
yeah, well, hey, we give Joe Rogan a run for his money with his 3 hour talks, but always great to kind of get that perspective. And as crazy as things are, I still feel you got to be doing the chart work to get the clear picture, no matter what is being broadcasted out there. We've got to define the opportunities. That's what Mitch and I do every day. Mitch every day. I mean, Mitch is every night around 7 o'clock Eastern. So I'll be over there tonight. You guys check him out. Yeah, 7:30. Buzz me on the Discord and we'll connect. But thanks so much for joining me. And again, thanks everybody in the chat. A great discussion, and we'll continue tonight with some beverage.
That's right. Thanks, everyone, and God bless. Respect the TA.
Amen. Take care, Mitch. Thanks again. We'll see everybody as always. Go get them. You have any questions? Reach out to me at harmonictrader.com on the website, and anything else, just come on back on We're back here Monday around 11:30. So subscribe. Until then, have a great